Hi everyone, Ali here with another video on how to analyze a stock in 5 minutes. So this is part 2 and I've just kept the name as the same from the previous video. But if you haven't watched my previous video on how to analyze a stock in 5 minutes, I would highly recommend that you watch that first and then you come over here and watch this video, because in the previous video I explained how to look at a chart on a long-term basis. When you're looking at a chart, how to identify the troubled time period, and whether the stock went up or went down. You'd want to understand, if it went down, why did it go down? And then from simple, just going to Yahoo Finance, how you can look at the financial statements, the income statement, balance sheet, and cash flow, and what are the main lines to look at, and how to correlate that information back to the chart. So that would give you a good overview on how to do like a simple check before you get really enthusiastic about buying a stock. And if you want to do further research, then you come back to this video, and this is where I'm just going to take a little deeper dive into what would I do next. So in my previous video, because I covered two airlines, I am just going to continue with that. And I have an account with TD Ameritrade, and then within the research section, there are some screeners available. So because I'm going to look at airline stocks, so I'm going to click on stocks and it brings me to this page. So I'm going to create a screen, and I'm interested in the airline industry. So when I clicked on sector, airlines are part of industrials, and then I click on airlines, and it gives me 25 airlines available. So there are many other criteria that you can screen based upon. One day maybe I'll do a complete video on how to utilize these screeners. But today, just continuing with the subject on how to drill down further with with an analysis of a stock. So when I click on view 25 matches, it gives me a list of all those 25 companies. And again, here are the other metrics that I could have filtered through to refine my list. But instead of doing that, I just got the 25 list. When I click on each one of them, it's going to give me some data. So because it just doesn't give me data all in one shot, I had to go one by one, compile the data into Excel to do an analysis. So here I have all the data, and I have the market capitalization. I have, and it gives me step by step. I have the ratings from different rating agencies. Then here are some of the fundamentals, these ratios, and we'll go through them when I go through these slides. So some of the fundamental ratios, for instance, earning per share growth rate, revenue growth, return on equity, profit margin, right? And you can Google these terms and try to understand what these ratios mean, and most likely you'll find examples to further explain, what's the benefit of these ratios and how to really understand what it means. Then it's price to earnings growth, price to book, price to sales, price to cash flow, and then the performance over the recent past. So now, using this is too much data, right? Just by looking at the data, a lot of you might get a headache. So I think the easiest way is to just look at graphical representation. And then what is price to earnings ratio? It's very simple. What is the price that you're paying to earn $1 of earnings? So in this case, and what I've highlighted these few bars is which is number one, number two, or number three in green, amber, and red. So I would have to pay the least amount of money, which is $2.50, to earn $1 of United Airlines earnings, and then followed by American Airlines, and then it's Delta. So in terms of price that I have to pay to earn the earning per share, is cheapest is United. Then the next one is return on equity. So the money that I'm putting in to any stock, what is the return that I'm going to get on my equity? So the best return I would get from Delta, then it's United, and then it's Southwest Airlines. Then price to sales, how much money that I'm going to pay for the largest amount of sales. So more sales, the lower the price. So that's what this ratio is depicting. We want the lowest number because we want to pay the least amount of money for the most amount of sales. And American seems to be the best one, then it's United, and then it's Delta. And then what is the price per to cash flow? So we want to pay the least amount of price for the most amount of cash flow. And when we do that, we again get American, United, and Delta. So clearly, the focus is on the top three airlines like American, United, and Delta. And then from a yield perspective, it's pretty cool that we'd be getting a dividend of 6.3 from Delta. Alaska is number two, and then it's American. So from all these metrics that we looked at, from a price to earnings ratio, Delta is in the top three. From a return to equity, Delta is number one. Price to sales, Delta is top three, and then price to cash flow, Delta is top three, and then yield is the highest on Delta. So, a lot of times people would run a screener or just go on Yahoo Finance and look at these ratios, and they'll say, you know what, or I don't know if a lot of people even would, like, from an individual investor basis. I don't know if people would go to the extent of looking at price to cash flow or sales, or they'd probably look at price to earnings, but then they'll look at the yield and they'll say, the yield looks pretty juicy, right? And I call them yield chasers, that people who would just chase yields without looking or doing much homework. So now I wouldn't stop here, because we know that the environment is pretty tough because of coronavirus. No one's flying. So how secure is this dividend, right? That's the next thing that we have to ask. And then the next one is debt to equity. So here we see that, all these ratios seem pretty good, but when we look at the debt to equity, how much equity is how much money I have put in, and how much debt have I taken from the bank. The least amount of debt, if I've taken the least amount of debt and there's more equity, the ratio is going to be smaller. And if I've taken more debt to equity, the ratio is going to be larger. So in this case, in American's case, it's 100% debt to equity ratio. So if I've put in $100, I have borrowed $100 from the bank. So now, if I were a seller of American, now would anyone pay, just the price to me, and I would say, don't worry about it, I'm going to take care of the debt? Probably not. You would want to make sure that you're getting money to cover for your equity and also the debt. And that's what, if anyone's going to buy it, as a buyer, you have to see, okay, how much debt is on the balance sheet, because more often than not, the buyer is going to assume the debt, right? So when it comes to debt to equity, the least amount of debt is on Southwest, then it's on Alaska, and then it's on JetBlue. So the top three airlines that seemed pretty good to us in the first few tabs immediately start seeing, now we have a bad taste in our mouth because there's just too much debt on these companies. And again, as I was saying to you earlier, when you're looking at these numbers, and this is what I was saying in the previous video, don't let large numbers or too many numbers just bog you down. When you're looking at these prices, think of yourself as going to own this entire airline yourself, you're going to be paying $15.5 billion to own the entire airline. And then it's just going to make it easier for you to think that, okay, okay, I'm going to pay 15.5 billion. Debt on the balance sheet is 8 billion. How much am I earning? So the net income is 4 billion, right? So it's just going to make it easier for you to really understand it. So then after looking at debt to equity, then we can look at price to cash flow. So we looked at price to cash flow over here, and we saw that American, United, and Delta were the top three. So American having the cheapest price that you'd have to pay for the most amount of cash flow. But when we look at so over here in the data section, I was able to get the rest of the data, obviously through the screener, but I could not get the entire amount of debt. Then I had to get free cash flow. So the cash flow numbers that TD Ameritrade has, it's operating cash flow. So I had to look at the free cash flow. So from the cash flow that these airlines generate, taking passengers from one place to the other and paying for expenses, that's cash flow from operations. But it doesn't stop there. They have to pay back debt. They have to pay dividends to investors, and they also have to and they also, a lot of these airlines buy back their stock, right? So that's where a lot of cash is being utilized. So after all said and done, how much cash are they left with? So here are the numbers that I got from Yahoo Finance, and then I calculated price to free cash flow, and I got these numbers, which you'll see over here, right? So first columns for each airline is what I had on price to cash flow. So in which case American Airlines looked the best. Then it was United. Then it was Delta. But when I do price to free cash flow, then it is United, followed by Alaska, followed by Delta. So this is where you can see that American is left with hardly any free cash flow after paying for debt or dividend or other things. But as I was saying that, I have to pay as a single owner, I have to pay for the market cap and for debt. So what is going to be my total price that I have to pay for these companies? So I've calculated the total price, and if I take the total price and then divide it over free cash flow, this is what I get. So here it is, total price divided by free cash flow. So now American looks the best. In price to cash flow, Alaska Airlines was number two, and United was the best. But when I look at the total price that I have to pay, then it's Alaska, followed by Southwest, and followed by Delta. So why am I focused so much on cash flow, right? Earnings can be earnings, right? You could, as I've shown you here, companies can earn a lot of money and their return on equity is going to be great. But at the end of the day, after paying for everything, then it's all about cash flow. How much cash are you left with? And then when we look at total price as a buyer, that you're going to come in and pay the current shareholders to take over the entire company, and once you take it over and then pay off the debt, and what is the cash flow that you're going to earn, this shows a completely different picture. So Alaska earning the most, then it's Southwest, and then it's Delta. And then we can see how has the performance been, and we can see that the best performing so far in this turnaround has been Alaska, and then the least the value lost, the least amount was Southwest, and then followed by probably JetBlue, and then Alaska. So this is how I would analyze stocks. when I want to take a little deeper dive. But would I stop here? No. The next thing I would do is probably over here, you can just click on Alaska Airlines and it's going to take you to the next page where it's going to give you more detail. And here is the next page, and it gives you all that detail that we were seeing. And then over here you can see the rating agencies, and you can click on, this is S&P report, so you can click on over here to view the report, which I've already opened over here. And here's a fancy report from S&P on the airline. And right off the bat, I can see that, this solid line is the price target, and they recently just dropped the price target from 80 to 40. So it's good to read these reports just to understand what these analysts are saying about these companies. And 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 right over here you can, like, just glancing, here's the past trend on revenue, here's the earnings trend, and they have 2020 and 2021 earnings over here. And you can see the earnings were per share, this is on a per share basis. Earnings were 6.4, 7.7, 3.5, 6.1, and now they're showing that there will be negative earnings due to the first 2 quarters of this year, and then the next year we should return back to somewhat normalcy. So then if you're really interested, or if I'm really interested in pursuing further, I would then go through the report and really understand about the business, about the industry, how these analysts are valuing this company, and then I would put my money in for the long term, and that's how I would do my analysis. So I hope this video was helpful to you, and you can take away something in how to analyzing these companies, and how to really dig down deep into these numbers, and not just look at first few indicators or numbers and just put your hard-earned money into these companies. So I wish you guys all the best. Take care. Bye.